the greatest moves we've seen in precious metals are after a crash, after a recession. My thesis is silver will not only surge, but it will actually outperform gold. Inflation-adjusted silver price today should be $73 an ounce. 73, or let's round up to $75 target is in line with what we could be seeing.
Risk assets have been selling off this past week, bit of a rebound in the middle of the week, but what's next? And what's next for commodities? Well, one report suggests that industrial demand may consume a lot of the demand for silver and other base metals, but silver in particular. And one of the components of the story is rising geopolitical tensions and what that means for demand. We'll talk about this with our next guest, Shawn Khunkhun, CEO of Dolly Varden Silver, and we'll get his outlook on silver and the broader commodities complex. Welcome back to the show, Shawn. Good to see you. Good to see you as always. People can check out our last conversation from almost a year ago. It aged quite well, but we'll talk about silver this year. You had predicted that silver would go much higher in 2024, and it did. So welcome back.
Thanks for having me on, David.
Silver, when we spoke last, I believe in October, was trading around $21 an ounce. It's currently at $27 an ounce, coming down quite a bit from its peak around 32. But your general thesis of why the silver price had gone up this year was more or less correct. It had gone up significantly from $21 to $32, pretty much a 40 to 45% increase from the time we last spoke, Shawn. Before we talk about the future, let's recap the past. What contributed in your mind to this big run-up that we saw up until this summer?
That's a great question. Look, I think there's a number of factors that are contributing to silver's rise in price. I think number one is the industrial demand at the current time. So we are consuming and using more silver than we are mining. And we've been doing that for the last 3 years. And so I think that has put a bid under the silver price. You've also had gold break out to all-time highs. And, 30% of silver's demand is on the investment side. So, historically, as gold prices go higher, so does silver. So I think that, silver, based on its industrial use and its investment case, are the reasons for the dramatic rise in the price. But I think the best days are still ahead of us because the silver to gold ratio is right now 90 to 1. And so, historically, the natural relationship is 16 to 1. So, in the natural setting, David, for every 1 ounce of gold that's in the earth, there's 16 ounces of silver, but we're mining 7 to 1. So if you think about that, if we're mining 7 ounces of silver for every 1 ounce of gold, and if you think about the fact that every ounce of gold ever produced is still with us today, whereas silver gets consumed in industry, and because of this 90 to 1 ratio, is not getting recycled like gold is reused, we are losing the silver we're mining. And that's why the natural relationship has gone from 16 to 1 to a mining relationship of 7 to 1, yet the price ratio is 90 to 1. And that's why I am more bullish today at $27 than I was at $21 last October.
Let's talk about, let's show the audience exactly what you mean by this divergence of the gold and silver price and the widening of the gold silver ratio. So here we have a chart showing the silver price. The bar chart is the silver price, and the orange line is the gold price. And as you've seen, they've more or less moved in lockstep up until July 11th. Incidentally, Shawn, as you know, July 11th was the day the June CPI report came out. On that day, the NASDAQ started following. The Russell spiked. Big rotation out of tech stocks, and a lot of risk assets started falling ever since the middle of July. Silver followed that risk asset trend, and it didn't follow gold by maintaining its value up here. Why?
So look, I think we're at a phase in the market where silver is predominantly trading on its industrial use. So it doesn't have an investment premium built into the price, and that's why, when negative news on the economy has come out, it's hurt silver. What I've experienced investing in silver over the last 20 years is if you move into a recession, or in the case of 2008, where we moved into, what looked like financial Armageddon, silver went down dramatically. You don't have to go far back. You go to the COVID lows of the spring of 2020. Silver traded to $11.94. It traded to 125 to 1 silver to gold ratio. Never ever seen in history before. So my answer to you is, in the immediate short term, if a depression is coming, if a recession is coming, if there is volatility, silver will trade lower. However, what we have seen, the greatest moves we've seen in precious metals are after a crash, after a recession. The best performing assets out of those are the precious metals. My thesis is silver will not only surge, but it will actually outperform gold as we begin to move ahead of a low.
Do you think silver is signaling a recession or a depression right now?
I think that there are a number of things signaling a slowdown, and I think and the way silver is trading is one of them. So yes.
Let me show you this chart that was tweeted by Peter Kraut, who is somebody I've interviewed, an expert on silver. This is a chart that he tweeted about how silver performed in the last couple of Fed cutting cycles. So as you can see, the summary of what he's trying to say is every time in the past, basically going back to the early 2000s, every time the Fed has cut rates, a big surge in the silver price followed for a variety of reasons, for different time magnitudes. Right, as you can see in 2001, silver took quite a few years to climb almost 500%. In 2020, it was almost instant with the QE injection that we saw. So the question mark remains: what's going to happen this time around? Well, if history even just rhymes, not even repeats, we could expect this Fed cutting cycle to see a huge surge in industrial metals like silver. Would we not?
I totally agree. And, looking at things like, looking at some of the monetary measures to track how much money is created and how much, currency is come out of central banks. The inflation adjusted silver price today should be $73 an ounce. So that would be in line with what, if you take some of the numbers there on the chart with that Peter had highlighted, from a 250% move to a 500% move, that's 73, or let's round up to $75 target, is in line with what we could be seeing. And, there's a lot of market pundits that are calling for a September cut, and it being the first in many to come. So we should start to see. And Peter actually also had a very timely call recently when silver was up over $30, and most were bullish. Peter said, "I suspect a correction to take us back to $26 is coming." So Peter has been spot on, and in terms of his calls on the silver price.
So bottom line, you're expecting silver to start catching up to gold. We saw these, what they call alligator jaws open up, this divergence. You're expecting it to close on the back of stronger industrial demand in 2025. Is that the thesis here, Shawn?
Look, I think the setup for silver is quite unique. There was an article that came out of the Jerusalem Post 2 days ago. The headline: "Industrial demand might consume the entire silver market by 2025." What we're seeing today in silver is unprecedented. So you're seeing, whether it's military weapons, which are totally underreported. If you have a critical component, and we move to a world where hot wars are more, very, very active in multiple places. So silver in munitions is one of the biggest uses, and I think it's underreported. You look at photovoltaics, you look at a whole host of applications in industry. We're using more silver than we ever have. And on the mining side, we are not keeping up with that demand. So I think just like, and normally, David, it's in the last price surges we've seen. We saw one in 2011. where silver went to $49. We saw one in 1980 where silver went to $50. Both of those surges had absolutely zero to do with industrial demand. Those were investment demand. That was investors. And on the back of both those runs, you had gold running off to record highs. In 1980, gold had gone from $35 an ounce in 1971 to $887 an ounce in 1980. In 2011, gold had risen from around $250 an ounce in around 2000 to $1,900 an ounce in August of 2011. So on the back of historic meteoric rises in the gold price, it was that investment demand that led silver to new highs. So this time in this move, you actually have a situation and a setup where we've never seen anything like this, and it could take silver. And that's why legendary investors who've made billions of dollars in the resource sector, people like Eric Sprott, are calling for triple digit silver, and he's put his money where his mouth is. He's making large investments in silver equities and has also stockpiled a lot of physical.
I can almost sense the comments from 20 miles away, and there people are going to say, look, we've been hearing triple digit silver for many years now. It hasn't come. This time is going to be different, primarily due to the fact that industrial demand will take front and center. Is that right, Shawn?
I remember in 2006, a lot of people were looking at people like Peter Schiff who were calling for a crash in housing or a big, and they were saying, hey, we've been hearing, you're a perma bear, you're a perma bear, you're a perma bear until you're not. And so, you know what? Sometimes things take longer, but I'll tell you, my experience has they go further. And so it's a confidence game, David. And the confidence is very much still in the dollar, and it is until it's not. And so I'm seeing it. I am on the front lines, and what I've watched is an industry that has been very reactionary. And so, Rick Rule, one of the legends in our space, talks about, the cure for low prices is low prices. And so, we've seen an industry react to higher prices in the past by going out and having a flurry of M&A and taking on a flurry of debt. When I first got into the industry, as a collective industry, we only had $2 billion of debt. Within a few years, we were up to 40 billion for a very, very small sector. So my point to you is the exploration, the development, and the pipeline of projects to feed the world's demand for silver just aren't there. And I follow industry experts, people like Keith Neumeyer at First Majestic, people like Phil Baker, who was at Hecla, who is now the chairman of the Silver Institute. These are guys that have gone all over the world for the last couple of decades sourcing silver, and they're scratching their heads going, we don't know where it's coming from. And if the industry, the miners, can't source the silver, this is why that article that came out 2 days ago is so timely. I made a comment that, I caught a lot of flack from a lot of viewers last time I was with you about, you can remove viewers. I don't dare say it again, but it's why I think silver, if there were ever an element to be removed and ever something to go extinct, the setup that we have in silver, I won't say anymore. But
I respect you doubling down on that call, even though you did get a lot of flack in the comments. Anyway, if you don't know what Shawn's referring to, you can click on the link down below. You can see our interview from last year, which got 100,000 views, by the way. So a lot of people paid attention to what you said, despite some comments there. Shawn, let's talk about this article you referenced. Jerusalem Post published an article 2 days ago. The title is, as you described, Industrial Demand Might Consume the Entire Silver Market by 2025. First of all, how significant would this shift be? Let's assume they mean 100% of the demand. We're near 100% of the demand of silver is going to come from industrial demand. What kind of move are we talking about from current levels? What percentage of total demand currently is industrial demand?
So you might have to help me with a calculator here, but let's say we're producing 850 million ounces as an
Yeah.
industry, and let's say 70% of that is currently consumed by industrial demand. So, the excess 30% would be consumed. So what does that work out to being like
Yeah.
200 million ounces or so?
70% of 800 would be 560. So yeah, about 240 million.
240. So what they're essentially saying is another. So right now, um, the and so that's one component. Let's really think about what's happening here. So right now we are in a 250 million ounce per annum deficit currently. Currently, okay, and that is investment demand and that is industrial demand. We are Our appetite for silver on an annual basis is 250 million ounces greater than we're mining. But if industry then consumes all the silver we're mining, where does that leave? And we haven't even seen investment demand come into the space. So do you see where there's a cause for concern here of where is the silver coming from? And you put up a chart there with gold and silver. Do you happen to have a chart on silver and copper?
Yes. Yeah, I know exactly what you mean. Let's pull that chart up. And this is yeah, we talked about this offline. This is another really important chart because Dr. Copper has been a good signal for not just economic growth but also industrial demand and industrial strength. But recently they've been moving down in tandem. But this can you comment on this very close correlation between silver and copper?
Well, it's similar to what I said about gold, in that, look, the reason as of July, as bad news, like, so we were in an environment where bad news in the stock market was good news because there was a feeling for the last 15 years that the Fed was going to come out to the rescue and central banks would intervene, and so bad news got treated positively. We're The news is getting so bad now, David, that bad news is bad news. And
Hmm.
so what you're seeing here as of middle July, you've seen assets, whether they're tech stocks, whether it's Dr. Copper, and they're trending lower. The reason I wanted to look at this chart though is there's another component to the scarcity of silver, this upcoming silver squeeze, the upcoming silver shortage, and that is 65% of the world's silver gets thrown off as a byproduct from copper mines. And I'll tell you right now, if I work in the mining sector and have for the last 20 years,
Yeah.
if I was lucky enough to make a copper discovery, it would take me 30 years to go from discovery to production. It would take me billions of dollars. My point to you is if 65% of silver is coming from copper, and the copper supply, up until recently, copper had a really nice chart there, right? It was having
Sure.
light gold, it was going to record highs.
Yeah.
But my point to you is there is a scarcity, and all the supply and demand fundamentals for silver there's some similarities in copper, but I think what this chart really articulates is the fact that there is no investment demand built in to the silver price. And going back to that gold and silver chart, central banks have been the buyers of gold. It hasn't been the retail public, right? It hasn't been Joe Sixpack, right? So the central banks are buying gold. They're not really going out and buying silver right now, right? And it's going to be retail investment demand. I was told when I got into the industry, gold is for kings. Silver is the gentleman's metal. There's a lot more gentlemen than there are kings. And that's why you have silver outperforming gold in precious metals bull markets. When you reach a phase of the market where it's a mature phase of a precious metals bull market, silver will outperform in that latter stage.
By the way, let's take a look at some of the demand drivers listed in this article here. Rising industrial demand. We know about technological advancements like AI, solar power surge, electric vehicles, military as a key
David, can I
factor.
stop you for one sec? Because you just
Yeah.
said AI. You just said AI.
Okay.
Um, I have a belief, and I'd like to get your view on this, but right now, when we hear AI, we think of like NVIDIA, right? Or we think of a couple of, Apple just outlaid their, Apple Intelligence, their form of AI, right? There's select companies that are getting this AI bid, right? To me, I see a parallel here to the dot com in that every company is going to utilize some form of AI in the future, just like every company has a website today, correct? The computing power needed to power AI is 14 times the computing power not, pre-AI. So my point in this is the technological usage, and not only AI. Think about these EVs. It's not about an EV. It's not even about EVs. All vehicles. Think about when you were a kid, David. Uh, what type of electrical components were in a vehicle. Today we've got these big screens, everything's all like that's all silver. So there's the most conductive metal on the planet. The use in these vehicles, in automotive, in technology, in photovoltaics, it's incredible, the surge, it's unprecedented. I think there's a quote in that article by Michael Duranzo. He's the executive director of the Silver Institute. He says industrial demand for silver has been on a relentless rise. He goes on to say the industry must address the impending supply crunch through innovation solutions and sustainable practices. Michael's not a miner. So when he talks about innovative solutions, unfortunately, you can't, when only 28% of silver comes from primary silver mines, there isn't any innovation you can just crank out to get more silver. These are deep mines that require tons of capital, and I don't see it happening. I don't, from my vantage point, I don't see it happening.
I haven't looked into how much silver is used in a CPU, but if you're watching this in the audience, comment below if you have the stats to prove that. But I want to show you this chart, Shawn. This is
Okay.
NVIDIA versus silver. And I don't know if anyone's ever talked about this, certainly not on my show, but I just want to bring this to your attention. Pretty close correlation if you just scroll the chart back slowly, all the way back to when NVIDIA started blowing up in 2020. So this is NVIDIA on the orange line, and silver is the bar chart here. So I'm just showing them as a close, as a different price scales here, and Nvidia is currently at a lot higher, 109, and then a couple years ago it was only at $6. So anyway, if you just
It,
overlay these two charts, they tend to have moved in tandem. Again, could just be a correlation, but I think the broader AI narrative works here. What's your reaction to this?
David, this is brilliant. I think you're the only guy on the planet that would put this together. No, this is very, very interesting.
Does it make sense to you though?
Makes a lot of sense.
Yeah. I want to go back to this article from the Jerusalem Post. It says here, uh, declining mining and a few new discoveries are a factor in their outlook. Mining challenges. Compounding the issue is the declining output from silver mines. Existing mines are producing less silver, and there are a few significant new discoveries to replenish the depleting inventories. Is this true, first of all?
Yeah, unfortunately, it is. Look, when I first came into the mining business, what I've seen is the average grade, and it's not just silver, it's all metals, is declining, right? We're having to go deeper and to more exotic locations. We're having to go to the Arctic, we're having to go deep into the jungles. And so it's totally true. Now, to compound that, we've had this, this debt creation, this debt monetization. You've got, all of this crazy behavior from all these central banks that instead of bringing in austerity, they're looking to, tax the populations and to go out and to either, if they're not taxing, some are going as far as nationalizing and expropriating projects. And at the same time, you've got this environmental push to be very, very sensitive to how we mine, how we treat the water, and these are all very, I support all these initiatives. Sustainable mining has always been the industry's goal. But my point in all this is it's all culminating at a time where the low-hanging fruit's been picked. You've got nations that are broke that want to take this stuff or tax it. And so what incentive is there for a company when the prices have been as low? Like, think about this, David. In 1980, the silver price was $50. It's half that today. What else do you know that is half the price of what it was in 1980? What incentive is there for, like, this is an industry that's average all-in sustaining cost to produce an ounce of silver is closer to $25. So if we're trading at a level, where it's modestly profitable for silver miners to produce today, what incentive is there for them to go out and develop or to even think about exploring to replenish inventory they're mining at a time now where the world wants more of this stuff? So it is the price needs to go north of 30, stay north of 30 to encourage existing production. So we need sustained $30 prices to make the industry profitable. If you want projects to get developed, I think we need to go to 40. If you want to encourage real exploration, you need $50 silver.
I know this is not what you're trying to do, but just listening to you talk, it sounds like you're making an investment case against investing in the miners. So what am I missing here? What am I not getting?
Well,
you're talking about lower margins, difficulty extracting. I get that. Challenges are abound. What's the upside here?
So look, mining stocks are not for the majority of the public. They're for sophisticated investors. So look, if you're new and if you're a rookie investor, just go and buy some physical. There's no counterparty risk. You own it, and if we're right, look, there's an opportunity to potentially double, triple, quadruple your investment with what's coming over the next coming years in silver. And that's an incredible return. You look at how well gold has done in the last couple of days of all this turbulence. When you had, different assets that were down 10% in a day, gold was relatively unchanged. It's actually up today, from where it was before all this volatility occurred starting on Friday. So look, you're right. For most investors, they should stay away from mining equities, right? Because it's a very volatile business, and it's one where it's fraught with risk, and it's not for the faint of heart. But it's why it's one of the most lucrative opportunities on the planet because of those attributes. Now, if you're willing to speculate a little bit, go buy a royalty company, go buy a Wheaton Precious Metals, and if you're willing to speculate a little bit more, go buy a producer. But where you're going to have incredible gains is for the companies that are finding this stuff. That's where value is created in our business.
So before we segue into Dolly Varden Silver, that's a good segue. I just want to ask you one more question about copper. Let's go back to this copper silver chart. So we talked about industrial demand for silver pushing up the price next year. Could the same fundamentals be applied to copper? Then first of all, are you assuming this relationship to hold?
It'll hold until the investment demand comes into silver, and silver starts trading more like a precious metal than an industrial metal. And what I think needs to occur for that is, now the stock market has a history of getting 6 months ahead of where we are on Main Street. Wall Street is 6 months ahead of Main Street. So I think it's not about, it's not about the recession or the lows of the recession or when we're getting through the recession. And is it a recession? Is it a depression? Is it a new monetary system? What is this going to look like on the other side? I don't know. Right. But my point is, a divergence will happen once the investment demand comes into silver, and I actually think that could be as soon as September. I think when we get that first rate cut, I think silver starts trading like a precious metal.
By the way, last year I saw a petition for the Canadian government to adopt silver as a critical metal. I don't know. Did you sign that petition?
I did sign that petition. I got my hats off to First Majestic. First Majestic is an innovator in the space. They've got the first mint. They're taking silver off the market. They're doing some great things, and they spearheaded that petition to make silver a critical metal.
What's your view there? Why should it be adopted as such?
Oh, look, we talked about you look at one application, silver's use in defense makes it critical. I just think if copper is critical, how is silver not critical?
Dolly Varden, tell us about the latest developments for Dolly Varden. Well, before we talk about the updates, just give us an overview on the project itself. So, located in British Columbia, is it pure silver play? Do you have copper? Is it a byproduct of silver copper veins? How does it work here?
Yeah, good question. So, look, the Golden Triangle in Northwest BC, Canada, has got a rich history of silver, gold, and copper. It's, some call it the richest 20 kilometers on the planet for deposits like Brucejack and KSM. Brucejack is operated by Newmont, the world's largest gold producer. So, look, when I first learned about Dolly Varden, I learned about the history. It was the richest silver mine in the British Empire. It was Canada's third largest silver producer. So it's a past producer. It's a brownfield site. And what we've done, I came in, David, 4.5 years ago, and I started bringing people and capital, science, and awareness to the company. And the company's grown from a $20 million company, and it's valued at over $200 million today. So we've seen a little bit of growth, but it's all been on the back of growing metal in the ground. So the business model here is I identified 4.5 years ago that silver was scarce, silver was rare, and silver was undervalued. At the time, it was $16 an ounce. And for the ounces that Dolly Varden had identified, we were getting 40 cents an ounce for every ounce that we had in the ground. The price of spot silver was 16. The ounces we had were valued at 40. With the price moving from 16 to 27, we're now getting over $1 an ounce in the ground. We've increased our mineral inventory. We've done that through drilling, through science, through discovery. It's a prospective area. There's been 1.2 billion ounces of silver discovered outside of our property. We currently have discovered in a formal resource estimate 64 million ounces of silver and 1 million ounces of gold. And we've got this ongoing exploration program occurring where we're trying to continue to expand and extend and discover new areas, but we're not just relying on exploration, which can be rewarding, but it also can be risky. We've also seen some of our greatest growth on the back of smart M&A transactions where we've done regional consolidation.
I believe you have some drill results to update us on.
We do. We will have some drill results. We've had some drill results. So the drill results we've put out to date have demonstrated we can make new discoveries. We've got this incredible 15-kilometer trend. It is the third richest silver mine in terms of a measured and indicated resource on planet Earth. So you've got one of the richest pure silver plays. A lot of the silver, I mentioned copper, something like 72% of silver gets produced as a byproduct. I mentioned earlier, 65% of that was from copper mines, but lead, zinc mines, gold mines throw off byproduct silver. What we have is rare. We have primary silver mines. They're 99% silver, and we're expanding and growing. So we've got some drill results pending from what's known as the Wolf deposit, which is just a wonderful system. It's predictable. It's high grade. It's wide. We're finding mineralization nestled in between a sedimentary cap and Jurassic Age Hazelton Formation. So we're able to predictably find more silver. And the market's been, has gotten behind us. 15% of the company is held by Hecla, which is the world's fastest growing established silver miner. They've been producing silver for the last 130 years. So I think it's a validation that a real silver miner who's looking to replenish their inventory is a shareholder. I mentioned Eric Sprott earlier, who's a legend. He's a 10% shareholder. Institutions own about 50%. So David, 92% of the company is held by sophisticated investors. And then we've got about 8% held by the public.
In terms of adding debt or changing your capital structure, can you comment on that?
I'm allergic to debt,
Okay.
personally, corporately. So we're debt free, and look, we view our greatest asset as not the pristine balance sheet we have and the ample cash that we have in the treasury. We think that's being eroded with inflation. We're trying to turn that cash into silver. So we're using the cash that we have. We've raised about $90 million, and we've translated that cash into growing the resource on a silver equivalent basis by about 100 million ounces. And we've got a lot of discoveries that aren't even factored into that resource estimate. So that estimate is an understated number.
I'm looking at your fact sheet on your website dated May. It says as of May, $18 million of cash. Is there an update to that number, by the way?
So we've got an aggressive ongoing drill program that we're in the midst of. So we're closer to $15 million in cash, no debt. And, our shareholders have come to us unsolicited, asking us if we want to enhance our treasury to drill more.
And total indicated and inferred resources, combined gold and silver, we're looking at 816,000 ounces, correct?
So what we have if we looked at a global resource, if we looked at a silver equivalent, we're
Yeah.
closer to 150 million ounces silver EQ.
Okay.
In all
Okay.
categories. That would be measured, indicated, and inferred.
Has the latest drill result changed that number significantly?
Not only has the latest drill results not, we've actually probably invested about $40 million in drilling and drilling about 100,000 meters that has
Mhm.
not been reflected in that mineral resource estimate. So
Interesting.
not
Okay.
just the latest,
So,
but last year's drilling, the year before's drilling, and we've had 100,000 meters of drilling, since our last estimate.
and finally, what are your milestones for the next year and a half? What are you planning to achieve into 2025?
Listen, I believe whether you're NVIDIA or you're Dolly Varden, it's all about growth, right? And how we grow is growing mineral inventory. And what's exciting right now is we've got discovery-oriented news on the horizon. So the catalysts are going to be positive drill results should translate into a higher valuation. And so we've got drill results on deck. And then look, we're out there making acquisitions. We made a big acquisition last December. So we're always on the hunt for regional consolidation and growing in the boardroom, not just with the drilling in the field.
And are you planning to go into production? Is that your ultimate plan?
Listen, I think once the silver price gets to real price discovery, and once we get into a time where I think it would be accretive to make that move, absolutely, David. I don't think we're going to be the company that does that. I think we'll at that point partner up with a miner who's got the expertise, the cash flow, and is needing really to replenish the silver they're currently mining.
Well, that makes sense. Well, put it this way, at what silver price would incentivize you or any other mid-tier producer to actually start, extracting silver for production?
So there's a number of factors to consider. So we were in a market about 15 years ago where the silver price was very similar to where it is today, but the equities had a higher value relative to the commodity price. And the equity finance markets were conducive to bringing a project into production in an accretive way that would bring value to shareholders. So it's not so much about necessarily just the silver price. It's how the equity and more specifically the capital markets would finance. The cost of capital is just too high today for me to want to stop adding. When we've got such a prospective area, and if your discovery cost or your acquisition cost is so low, you just continue on that path. And so, listen, we've been doing this for a long time. I've got business partners that have been doing it for twice as long as I have. I think what we've demonstrated at a time where most of our peers have gone out of business or close to failing, that we've demonstrated some growth. I think we should have built the trust of our shareholders in the market that we will make the appropriate decisions at the appropriate times.
Final question before we go. So management is obviously a considerable factor for investors looking into any company. Tell us about your personal track record in this space leading up to where you are now, currently in Dolly Varden.
Yeah, listen, I've had the privilege to have incredible mentors. I have one today in Frank Justra, and people that are there's on one hand, I can count you the legends in the mining sector that have done wealth creation. So look, I was, born in the right place at the right time and went to work for the right people. And I've got a team of scientists that are incredible. So for the last 20 years, I've been building gold, silver, and copper companies predominantly in Canada. I've raised probably in excess of $3 billion for mining opportunities. And, where I drive value to shareholders is essentially marketing companies and transferring wealth from investors to scientists who are ultimately creating wealth. So that's how we drive wealth. And we're aligned with our shareholders because we're big shareholders. We put our money where our mouth is. We work extremely hard. And like I said, it's a tough market. It's a gauntlet of things that can go wrong, but it's all about coming into an opportunity at the right time with the right team. And I got to say, David, there's a lot of luck that is involved and in that as well.
Well, I wish you a lot of luck in the last quarter of this year and into 2025. We'll speak soon, I'm sure. But before we go, tell us where we can follow more in regards to Dolly Varden news updates and so on.
Yeah, you can join our mailing list, and I think the team does a great job of communicating, what we're doing. So you can go to our website, dollyvardensilver.com. We're active on X at Silver Varden, on all the social media platforms, and we also welcome good old-fashioned phone calls. We've got a toll-free number and different phone numbers on the website. So we'd love to hear from shareholders, and we've got just like we have a team of scientists, we have a team on the communication side that is happy to talk to people.
Excellent. Thank you very much, Shawn. Appreciate your updates, and we'll speak again soon.
Thank you so much.
Thank you for watching. Don't forget to like and subscribe.